Global markets have been shaken by the threat of US tariffs on Mexico, Canada, and also China. The markets have been really volatile in the past 24 hours. President Trump agreed to delay 25% tariffs on Canada and Mexico for 1 month. But this is not over. Even though US tariffs have been delayed against Canada and Mexico for a month, it's still open as to what will happen with China. The markets definitely do not like uncertainty. Financial markets globally were very unprepared for what happened with the US tariffs, and the crypto market felt it. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. If you're new, a very warm welcome and welcome back CTKS family. My goal is to assist you in becoming more of a financial and emotional blessing to yourself and those you love through positive excellence. If you like the content, please smash that like button and don't forget to subscribe. We have one of the best communities on YouTube. We look forward to welcoming you into our global family. There are a lot of free resources on CTKSmethod.org. The link is in the description of this video. Let's see where the markets are going in the next 24 hours. And let's run the numbers. As a data-driven community, we keep our eye on the key economic releases because these high-impact economic events can shake markets. And one thing to just be aware of before Valentine's Day, the CPI comes out. That is likely to move the markets considerably. Also, keep your eye on the JOLTS job opening and the ADP non-farm employment change. These high-impact economic events can lead to market turbulence, something that you need to be aware of. The next FOMC meeting is in about 44 days. Currently, there's an 86% probability of no change and a 14% probability of a 25 basis point decrease in the federal funds rate. We'll need to keep our eye on these target rate probabilities because if inflation goes up, the probability of a rate cut will diminish. The probability of a rate staying neutral or even increasing will be on the cards. It's advisable not to listen to the mainstream media news. Certainly look at the articles, have a laugh, have a bit of fun, but do not make your buying and selling decisions based on the news. All you need to do is to look at structure. When Bitcoin came down on the news of tariffs against Mexico, Canada, and China, it really came down and we saw in excess of $2 billion worth of liquidations. Across the crypto market, double-digit negatives were everywhere. Today, that seems like a distant memory, but it didn't feel like that yesterday. The vast majority of technical analysts will look at a chart like this and throw some moving averages, some Bollinger Bands, some different things across it, trying to understand where price can find resistance and support. Through level 1 and level 2 status certification, we just bypass all of this process because we mark up scientifically with the greatest degree of statistical accuracy, where support and resistance levels exist inside market structure. I'll just put some values on here for you. In yesterday's video, we were trading up around this 98,384 structural resistance level. We got a structural failure and that created NSA or negative structural attraction down to the 96,493. The sellers were simply too strong and we got pushed through that 96,493 down to lower structural levels. We also had an enormous amount of panic inside the markets. The markets were not prepared for the tariff trade wars. However, we did find structural support around that 91,507. Then we got attracted back into this 93,432 area to the 94,574 area. Just as we got a structural overshoot through the 96,493, and I talked about that in yesterday's video, we got a structural overshoot and positive structural attraction to the 98,384 level. It took a while to consolidate and get through all of this because there was an upper area of two structural resistance levels at 99, 305 and 99, 534. And then we encountered another positive CTKS gap. Now price has encountered all of this overhead structural resistance between 101,819 and 102,691. The thing to understand, when panic hits a market, it will take multiple structural support levels to reflect price. One of our beloved CTKS ambassadors, Beardy, said they're like trampolines. You can go down, it gets heavier and heavier, and it will fling price back up. And this is exactly why we seek to buy on red and sell on green. But your percentage return just depends on your own personal preference. If you're an investor, you can use these levels to more effectively know where the buyers are going to come in and defend prices. And don't forget, the trade wars are not over. They're just set on pause, except for China. Always remember, price is moving in a wave between structural levels. If it can't get above, it's going to the structural levels below. And you know where the structure is already. You just mark up your charts with level 1 or level 2 and level 2 standards. Or alternately, you get the monthly indicator. We'll do all the hard work for you, but you must know where this structure exists or else you're just guessing. To maintain a bullish case scenario, we need to see the price get above this 102,691, and it could absolutely fly up to the 106 because this structure is quite light. You can see it's currently trying to consolidate and just digest all of this selling action up here. This is exactly what causes consolidation. When price goes up, it's hitting multiple levels of structural resistance. And you see the same thing when price is going down as well. You have X-ray vision. You have the world's most powerful smart money buy and sell level detection system. And we prove it out year after year, each day. The key levels for you to watch are this 102,691. We need to get above there to go higher. And if we're going lower, a violation of that 98,384 is not good. Now, how do we know in which direction price can actually go? That is the secret. To unlock this secret, just go across to CTKSmethod.org and scroll down on the home page until you see this one, the CTKS Method cheat sheet. It is completely free and there are videos there on how to use it. You can also get the official ticker list from CTKSmethod.org. So let's get into it and let's decode the markets. Row 1 of the cheat sheet is the VIX, the DXY US dollar currency index, Japanese yen, and 10-year, 2-year, and crude oil. There exists an inverted relationship between most of the charts on the row 1. And we can see this by literally inverting the scale. If I invert the scale on the VIX versus Bitcoin, which is the blue line, I'll just go back in here if this helps. So you can see that Bitcoin absolutely plummeted because of the threat of trade wars. That threat is not over, family. The mainstream media network news will have you say, it's all good, it's all finished, fantastic. But it's being delayed and China has not weighed in yet as well, so please be aware of this. We saw that literally Bitcoin just plummeted down, and as the VIX started decaying because trade deals were made with Mexico and also Canada, what happened? We saw a rallying inside Bitcoin. If you were simply looking at Bitcoin's chart and saying, I'm going to put an exponential moving average on here and a Bollinger Band, you're missing the fact that the VIX controls Bitcoin. You must look through your chart. And what about the DXY? You can see that inverted move. Now, I'm just going to uninvert it. So this is normal Bitcoin. How do you determine if it's normal or not? You can see the big number 106 and the little number 94. If the little number is on the bottom, the big number is on the top, it's normal. And if it's the other way around, it's upside down. It's inverted. Very technical. As we can see, there are two drivers on the bus of risk at the current time, and profiting members will understand what I'm talking about. We have the VIX and we have the DXY. If the DXY continues to come down and the VIX continues to come down, and you can use the VIX futures because the VIX is kind of lazy. VIX proper, it only properly trades in proper hours. But the VIX futures, hey, it's trading into the future. It's trading all the time. And so this is what you want to look at from a directional stance. So if we see, now just uninvert these back so that you can see how Bitcoin is playing out. If the DXY continues to come down, well, that's terrific news for the crypto market and also the stock market. The stock market is controlled by the VIX, and the DXY has a huge implication for the stock market as well. In the next 24 hours, I suggest that you keep very, very close attention to what the DXY is doing and also the VIX. Row 2 is all about junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. And what do we notice here? As Bitcoin was coming down, what was junk bonds doing? It fell off a cliff, and it's not realistically recovered. You can see that the forward momentum is more driven by the VIX and the DXY rather than junk bonds at the current time. And what about the euro dollar? You can see that they're getting into synchronization. What about the Aussie dollar synchronization? So what does it mean? You look at the VIX, you look at the DXY, but cross-confirm with the euro dollar and also the Aussie dollar. Very important. Because it's a trade war, currency is on the forefront of what is happening inside risk. The interesting thing, when the trade war erupted, gold came down abruptly, silver came down abruptly, and also copper also came down abruptly. They have since recovered, but that recovery is due to the recovery of the VIX coming down and the DXY coming down. Now you're starting to think institutionally and not from a retail perspective. If you think retail, your account will get obliterated. Row 3 of the cheat sheet is all about the major indices, the S&P 500, the NASDAQ, the Dow, and the Russell. And what do we notice with this blue line? Of course, the blue line is Bitcoin. If you're looking at Bitcoin and assessing what Bitcoin will do from Bitcoin's chart, hopefully I'm proving to you, you shouldn't be doing that. You need to look more broadly. And this is what I teach in the Profiting from CTKS Method structure, which I will be offering a number of scholarships to. More about that coming up. So if you really want to learn, I will support your learning path. One thing that we can see very clearly, the directional association is absolute. The NASDAQ, the S&P 500, the Russell, they're all moving in lockstep. But one of the problems that we face when looking at the major indices, they don't go into the futures. We need to look at the futures, so let's do that now. You're going to hear a lot of stories on the mainstream media news networks, and it's all going to be about screaming and open faces and the world is at an end or the world is taking off or whatever the heck it is, but it's all rubbish because you need to look for intercorrelation and interconnection. Having been inside financial markets for nearly 40 years, oh boy, I'm getting old. One of the things that you'll see, and a lot of old timers in the markets know this as well, when you listen to the news, you're going to go in the wrong direction. You need to look at the charts. It's what all professionals do. They do it for a reason. The news is always lagging. It's really good to be on top of the news and to understand it, but it's even better to actually understand what the charts are doing. Here we see the S&P 500 dropped off a cliff and then recovered. What's the blue line? Which of course is Bitcoin. And what is Bitcoin? It's really the ultimate risk sniffing indicator in existence. A lot of people don't like crypto because they were told by very well-meaning banks who weren't positioned properly in the crypto space to not look at it. Because we don't control it yet. They need to control it. Oh, okay. So, however, when we look at something like this, we can see the intercorrelation is really playing out. And it does this all the time, especially in sell-off events. So what do we see here? A bit of a sharp angle reversing and reflecting. But if you had have listened to the news, you would have thought that $10,000 Bitcoin was on the horizon. And of course, all the markets would go the way of 1929. That's the problem with the news. There's so much noise. It's kind of like X. There's so much noise and so little value. Ken, don't say that about X. Okay, anyway, when we look at row 4, which is the stock market, Apple, Microsoft, Nvidia, and Tesla, we can see that directional association gives a fairly good indication as to what may happen across different stocks. And we've seen Nvidia weakening and Microsoft weakening. Microsoft and Nvidia contribute a lot of market capitalization to the major indices. And we can also see MicroStrategy is up, doing well. But of course, where Bitcoin goes is where everything goes, because there's such a tight intercorrelation and interconnection between the charts. What you can see here is when we had that big sell-off, everything sold down. Bitcoin sold down, everything sold down. Note that Bitcoin recovered first. This can give you an excellent insight into what the stock market is doing. Unfortunately, so many people are set in their ways. They just simply say, oh, I'm not looking at Bitcoin because somebody told me not to look at it. Hey, be independent. You can assess everything on its own merits. And if we look at the intercorrelation and interconnection between Bitcoin and just about everything else, financially, you'd be a little bit short-sighted if you didn't keep your eye on the crypto market. Row 5 is the crypto market, total crypto market cap, Bitcoin, Ethereum, and we covered off MicroStrategy in row 4. We can see when the major market indices were plummeting, and you should be able to see the futures on the S&P 500, the Dow, the Russell, and all of the stocks by looking at Bitcoin. This is how powerful Bitcoin is. It's undeniably powerful, but you must know where the structure is as well. Because we know right down here in Bitcoin, around that 91,000 mark, there was really quite strong structure, and there was a gravitational well through this area. So even though it fell down, it had safety nets to reflect it back. Remember, they're safety nets and not brick walls. It would be pretty pointless to have a brick wall as a safety net. Can you imagine being a trapeze artist? Oh no, I missed the thing, I'm falling, splat into a brick wall. Fortunately, safety nets don't work that way, and when you have a huge amount of panic, it's exactly that. People become utterly irrational. They panic. So you can get these really long-tailed spikes down. But everything will come back to Bitcoin. And of course, total crypto market cap structurally is important to look at as well. One thing we're doing here is we're just looking at the directional correlation and momentum. We're not looking at structure. We only looked at structure inside Bitcoin, and it gives you an incredible insight into how and why things turned around. I'd like to thank all of our beloved global family who've reached out and connected with me on LinkedIn. It's so wonderful to be in contact with you. Please note, on LinkedIn, I'm giving out a lot of alpha in the comments, so please make sure that you hook in and follow me there. If you would like to connect with me on LinkedIn, you can just go to the link in the description of this video or this one. If you've done different qualifications, you can just register them in your About section. And if you're interested in getting a partial scholarship to the profiting from CTKS method structure, please just reach out and let me know. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.